Okay, welcome everybody. It's time to talk about my very top holding. This is my biggest conviction in my growth portfolio. It's Google. The company's called Alphabet. That's the official name of it, but I'm going to be referring to it as Google because that's what everybody knows it as. Google is my top holding. I think the company's undervalued by a large amount right now. I think that investors don't really realize all the mechanics of how good this company is, all the different parts of it, how quickly they're growing, how many tailwinds they have, and how big it will be in the future. I plan in this video to outline some things that you may have not considered with this investment. Because I know you're looking at Google and you're saying, okay, I already know about Google search and YouTube and the Google Cloud products or Android. What are you going to share with me that I don't already know? Well, that's what I plan on doing in this video. I plan on sharing some things that you may have not considered with Google. And I think that they're very important things for investors to know. If you're also an investor in Roku, you'll be interested to hear this video as well, because I am going to be talking about Roku and how it interacts and plays into Google as an investment. So we're going to be talking about both Google primarily and then a little bit of Roku. So if you hold either of these companies or are interested in them, I think this video will be valuable for you. Now, like I said, I have a growth-centered portfolio. It's called the Story Fund. I share this one publicly every week. So if you're a subscriber to the channel, you'll be able to see the progress of this every week. I'll give frequent updates of it. I track the performance of it against the S&P 500. Right now, it's trading about in line with it. It was above the S&P 500 a lot, and then with the recent sell-off in high multiple tech companies, it came down a bit, and right now we're just about even. But regardless, this is a portfolio where I try to find and determine what presents valuable, mostly tech, high-growth companies that meet certain characteristics. Of course, they're companies that are typically, they can scale well. Most of them are category winners. They're winning in their category. A lot of them have first movers advantage. They're in future-driven industries. They have long tailwinds. They offer products that are convenient, simple, easy, all that type of stuff. So beyond that, there's some other things I look for as well. In general with investing, I look for investments that have high return potential, that have low chance of failure, and that have a long duration. So that is kind of the holy grail of investing, is when you have investments that they can have a high return potential. You don't want something like a bond that's going to give you 3% over the next 20 years. That will not make you wealthy. You'll be sitting there with as much money as when you started 20 years down the road. And that's not what we want. We want to make a lot of money over long periods of time. So I want high returns. I think that Google presents an opportunity to have very high returns, but we also want a low opportunity for losses. We want minimal downside. We don't want high returns at the risk of having substantial losses. Again, Google's a company that I think offers the potential for very high returns. In fact, I think it will give very high returns over the next 10 years. And I also think it's a company that has very low downside. There's some risk with it, with regulation and different things. But overall, looking at the pricing of this company, the current growth rates and the assets, I think the downside is very minimal. You also want investments that are long duration. I want plays that are over the next 10 years. I want to be able to invest in a company, sit on my butt, earn money for the next 20 years and not worry about it. I don't want to be trading in and out of stocks all the time, doing this exhausting work of buying into some small company, waiting till it goes up 10%, then selling out of it and buying the next company undervalued. That is, in my mind, a very difficult way of investing, a very active way of investing. It's difficult to pull off, and most people aren't going to do it successfully. Outlining good investments that have high potential returns, they have low chance of failure, and they have very long durations, I think will lead to much better outcomes. In my opinion, Google meets all three of those. I plan on going into it. Now, if we outline, first of all, let's take a look at Google's business. This is how you could boil down how it's broken out. We have AdSense. That is their advertising network that can also be combined with Google Search, but it's much bigger than Google Search. AdSense is ran everywhere. It's an advertising network that everybody uses to advertise all across the web. Of course, there's other options available, but AdSense is a massive business. Its biggest competitor, the closest thing you could compare just AdSense to, is Facebook. Facebook is the next biggest advertising platform. Facebook might be a little bit bigger than Google in terms of advertising, but both of these companies do a lot of different things. AdSense is a massive business for Google. That's where they get most of their income. So this is the biggest part of their business. Then we have YouTube. YouTube started off as a smaller business. I think they bought it for like $7 or $8 billion years back, maybe a decade or so back. It started off as a company that offered cat videos and funny videos online. Some of them would go viral, but it was one of the first videos that users could upload content. They didn't have limitations of file size or anything like that. And of course, it's came a long ways. We have cloud. Google has a bunch of cloud and work products. They have things that mimic Excel and Microsoft products. They have user administrative emails that businesses use. They have Google Drive. They're very big into cloud. That is a big portion. And they have Android. Of course, everyone's familiar with Android. Anybody not using an iPhone is basically using Google. They're using their operating system. All of these are massive businesses. All of these are growing. They're growing quickly. These are all successful, massive, and growing businesses. Google is not one of the companies where you have to go, well, I want to invest in it because they have the cloud products, but darn, that YouTube is really weighing it down, right? No. YouTube is not weighing Google down. AdSense is not weighing Google down. Cloud and Android, not weighing Google down. Every aspect of their business is growing rapidly. So when we look at this list, it's not like something like AT&T where they have parts of their company that look really appealing, like Warner Media and their streaming service, but then they have some parts like the old DirecTV that are weighing it down. Every part of their business is killing it. Every part of their business is being successful. It's just pick and choose what part you like the most, but you can't argue that any part of these businesses are not successful. So every part of this business is growing, and that's rare to see, especially for a company that not only is every part of it growing, but every part of it is mature, stable, and in some cases a monopoly. I think that YouTube is somewhat of a monopoly. They're the only ones really doing what they're doing right now. Google.com is clearly a monopoly. That is beyond doubt. They control over 90% of web traffic, probably even closer to 95 to 100% of it. If you want your business to show up on relevant results, you have to be on Google.com. This company has things that are monopolies that are growing very rapidly. That is a rare combination to see. So just to give an idea of how quickly this company is growing, we can look at some data here. This is from Seeking Alpha. If we look at the total revenues graph, okay, this is overall the revenues, the amount of money they're taking in. We can look all the way back to 2011. If you can see this, let me zoom in a little bit. It's too far. Okay, so total revenues here, 37 billion in 2011, 46 billion, 55 billion, 66 billion, 75 billion, 90 billion, 110 billion, 136 billion, 161, and then 182. Now, that was a little bit slower, that growth in 2020, because as we know, with the virus that came around and the pandemic, most companies shut down and they cut their advertising budget. So 2020 was a unique year where Google's revenue didn't grow as much as it normally does. But regardless, it still grew. So even though their core business, which is advertising, got impacted heavily by the coronavirus, the company still is much bigger today than it was a year ago. This is the power of Google. They have so many growing aspects of it that it seems like nothing can slow it down at this point. And those are the whole numbers, right? Even if we look at the percentages of growth, 29%, 21%, 20%, 18%. In 2015, they grew 13%, a little bit slower there. And then in 2016, they grew 20%. 2017, they grew 22%. 2018, they grew 23.4%. 2019, they grew 18%. This is a company above $1 trillion market cap growing their revenue over 20% every single year. In 2020, it grew by 12.77%. Still double digits, but lower because of coronavirus. So that slowed them down a little bit. If we look at, this is Yahoo Finance. If we look at their analyst predictions for next year, they're going to grow their revenue 24%. For 2021. And then they even estimate a year beyond that, at least about 17% of revenue growth. So the point is, this is a rapidly growing business. Google is growing rapidly, even though it's a mega cap company. It's growing like it's a startup, like it's some type of small new company, and it's a mega cap company worth $1.4 trillion. Most people assume that when a company gets to a certain size, the level of bureaucracy and overhead and managers and the market saturation, it means that they have to slow down their growth and that they naturally get slower, more bloated, less efficient, and the company starts to fizzle out after a while. That's what most people think with really big companies. Google has shown just the opposite. As they get bigger, they get more efficient, they get more lean, their margins go up, they get more profitable, they have more money to be able to expand rapidly into other growing categories. They do experiments and projects in different companies, and they do all sorts of things to continue their growth rate. And even the analysts at this point are saying that it's likely going to continue as far as they can see. They're predicting 24% to 17% year-over-year revenue growth for a $1.4 trillion company. That is incredible growth for a company this size. And the people that have said, surely, at one point they're going to have to slow down their revenue growth. They've been saying that for a while. There's articles like this back in 2015 that show the power of scalability with Google's products. Facebook had came out with Facebook Video, which was a direct competitor with YouTube. Many people at the time said that Facebook Video is going to hurt YouTube's growth, right? YouTube was already big, well established. Now there's a new competitor. That's gotta hurt YouTube, right? That is the common consensus. But later down in this article, we can see what happened. This is from YouTube. They say, quote, "There are only a couple of companies that are growing as fast as we are at the scale we are." That's accurate, and that's still the case today. And they say, quote, "We expected a deceleration of the business, and it's actually accelerating." Think of that. The business as big as YouTube was back in 2015, which they expected, surely it should slow down. It can't keep growing at these rates. Just the opposite. The rate that it's growing increased. It increases over time. And the same thing happened last year. The rate that YouTube is growing has increased year over year. That's incredible to see for something their size. Now, with this level of growth from Google and all their different products, because they hold a monopoly in so many different areas, they have a monopoly basically in YouTube. They have one in Android. It's a duopoly between them and Apple. With Google search, they're clearly a monopoly. This gives them so much more leverage overall, so much more ability to grow different products. And even countries at this point are less powerful than Google. Even countries. The US can't stop them. They can try to fine them. Europe has fined them a bunch. They say, hey, Google, you did this anti-competitive thing. Pay us $4 billion. And then Google will say, yeah, sure. Let me check my pocketbook, right? Let me get my debit card. Let's pay for that little rounding error on our yearly revenue. No biggie. They can't stop Google. Countries can't. Other companies can't. All they can do is watch as they snowball their huge momentum and their market share into a bigger snowball. That's what Google's doing right now. Another company I want to bring up, I talked about them at the beginning of this video, but this is where it ties in. You have Roku. This is a company that followed somewhat of a similar path of growing to scale, and now they have a lot of scale with the streaming boxes. Just to explain what Roku is, it's a company that offers the little plastic streaming box you download different apps on to turn your dumb TV into a smart TV. So you'll get the streaming box, hook it up to HDMI with your TV, and then you download Disney Plus and Netflix and the YouTube app and HBO Max and so on and so forth. Now, that's where most of the information ends for the common consumer of a Roku device. Most people don't understand what's going on in the background. Now, what Roku really does, this is what most people don't know, is that because they have such a big market share, they have so much scale and so much market share of the connected streaming devices that people use to connect to their TV, Roku uses that leverage to be able to bully other streaming services, other cable giants. So much so that there's articles like this. Roku torments, they torment entertainment giants in a quest to dominate streaming. Most people don't realize this is going on. Basically, what Roku does is because they have this market share, they extort the streaming services by saying, in order to get on our device, in order to get access to all of our customers, we charge a lot for this. Not only are we going to ask to share a large portion of your revenue through ad revenue. So if you're an advertising streaming platform like Peacock or YouTube or whatever, we're going to share in that ad revenue. But if anybody signs up through us, we get a cut of it. Plus we want original content. So Peacock, HBO, give up some original content. We're going to throw that on our own streaming channel, the Roku TV channel. So they have their own Roku streaming channel, and they take content from other providers and put that on there. And that's all part of their harsh agreements to get onto their platform. Roku has bullied many streaming services into very beneficial agreements for Roku, where they have to give up a lot of revenue and a lot of content to be able to get onto their platform. An example of this is just right on this page here. It says, the makers of the leading streaming media player have taken brash negotiation tactics over its terms to carriers like HBO Max and Peacock. This is some big demands that Roku has, and they get them because of their leverage. But there's one company that really didn't agree to anything with Roku. One company that said, yeah, you might have this much leverage, We have a lot more. You might be big. We're a lot bigger. We're not going to give in to your demands. You're going to give in to ours. So take it or leave it. We're not going to give you a dime. That company was YouTube. YouTube is the only app on the Roku device that has no agreements with Roku. They have no monetary agreement of sharing revenue. They gave them no original content. They don't pay any fees or subscriptions, nothing. Google said, no, we're not playing your game. You might be some big fish in this little streaming box world, but we're a lot bigger. And you need YouTube more than we need YouTube on your app. In fact, if you're the only streaming device that doesn't have YouTube on it, you're probably going to fail. So we have way more leverage than even you have. YouTube is the only one that has zero agreements with them. Netflix is pretty big. So they had a lot of leverage as well, probably more than Roku, but they even gave up some small concessions. Even Netflix did. The other competitors like HBO Max and the other streaming services, Peacock, they had to give up some very big concessions. But YouTube gave none. Netflix gave some very minor, very small concessions. You can look at that in this article. It says that consider that Roku says Netflix, the most popular video service on its boxes, makes the company next to no money. So Netflix is another one of these big players. They gave up basically no concessions. They say, I don't know if that's because the consumers are signing up for Netflix outside of Roku, so it doesn't get the cut of revenues, or if the bounty Netflix gives them for signups on Roku devices doesn't amount to much. I think it's because Netflix is a big company. They didn't give Roku any type of great agreement. Roku needed Netflix as well. But we look further down on this and it says, meanwhile, Roku says that YouTube, its most popular ad-supported service, by the way, YouTube alone makes up 40% of the ads on Roku, doesn't give Roku a cut of its ads or any other revenue. It's a zero. Roku gets nothing from YouTube. That is the power of scale. That's the power of leverage. Google has this in every facet, everything they compete in. They have bigger scale. They have more leverage than other companies. That's why companies like Roku can't bully them in the same way they do with HBO Max or Peacock. Roku can say, no, we're going to keep you off until you meet all of our demands. And they really have to give in because people are still going to keep the Roku box as long as they have Netflix and YouTube. So that's an example of the power of leverage. That's what Google has that most other companies don't have. Now, the next thing I want to talk about is just a direction that I see Google moving, especially with YouTube. And I want to illustrate this through watching some videos with you. So we'll watch a few clips of this. Here is one example. This is an example of where I see things going. I see people moving away from cable, and even in some cases moving away from Hollywood and joining YouTube. Here is the video that Jack Black posted as his first YouTube video back in 2018.
Hey, what's up? It's me, Jack Black. This is my new YouTube channel, Jablinski. It's gonna be bigger than Ninja. It's gonna be bigger than PewDiePie. So what's Jablin, Jables? It's PewDiePie!
Okay, that's basically it. Jack Black is obviously a A-list celebrity, mega celebrity. This video, the first one that's like 28 seconds long, got 15 million views. So he's a huge celebrity and he started a YouTube channel and he's uploaded to it frequently. He has a lot of videos on it. He's not the only one too. A lot of other celebrities are following suit. We have every late night show, The Tonight Show starring Jimmy Fallon. We have Conan. We have Jimmy Kimmel. These are getting millions and millions of subscribers, 17 million for Jimmy Kimmel. And in some cases, they get more views and interaction and engagement on their YouTube videos, the cuts of their show, than they do in actual cable. They're getting more engagement on YouTube than actually their show on cable, which is pretty incredible. We have news networks. CNN, Wall Street Journal, Fox News, CNBC, all of them are on YouTube. That's where they get a lot of their engagement, a lot of their views. We even have videos like this. You might recognize this guy.
All right. Yes, the first 3 words this young man ever said on film.
That, of course, is Matthew McConaughey. This is from like a week ago. He just started a YouTube channel. So even mega A-list celebrities are still coming over to YouTube. They're not moving away from it. They're moving from cable, from Hollywood over to YouTube. Now, I think Matthew McConaughey will still continue doing what he's been doing, making movies, and this is probably a side project for him. So in this case, YouTube probably isn't his biggest thing, but in some cases it is becoming, even people that were previously in Hollywood, YouTube is their new place. People that were previously on cable news, YouTube is their new place. You can look at the example of Kevin James. Kevin James has a YouTube channel that I think is highly underrated. If you go to his YouTube channel, you can see how many videos he posts. He has a lot of videos on this, but He produces a lot of content on YouTube. And this isn't like a little side project. This is like some serious content he's producing. He has different series. These are little mini videos. They're entertaining. And in my humble opinion, I think that Kevin James's content on YouTube is better than what he's done in the movies or what he's done on cable. Here's an example of one video that he's done. This is on a series called The Sound Guy. Kevin James plays like a sound guy on a set of a movie. This one's No Country for Old Men. It's a very popular movie. This is one of the best scenes, I think, of any movie. And Kevin James uses the sound guy. He kind of edits himself into this role. So this is a type of content that people like Kevin James and former celebrities are now producing on YouTube.
Oh, hey, Mr. Javier. The actor, Gene, who was playing the cashier, he had to run to the bathroom.
This is his sound guy, a little bit that he does. See how he's edited in there? And it's really professionally done. It looks like he's right on set with them, but they have to do a lot of camera work to do that.
For a second, but if you needed someone to run lines, I could stand in here with you if you want. I'd be more than happy to do that. You know, I studied the script last night. So either way, if it helps you out, you know.
What way would that be?
Either we can do it or we don't have to.
It's so good. All these sound guy clips are good. He has a bunch of other things he does where he interacts with different celebrities that he's not even in the movie with, but it looks extremely real. It's just entertaining content that Kevin James has grasped onto, this short form content. This whole video is like 2 minutes long. We can watch a couple seconds more of it.
To do it.
What business is it of yours?
You're totally right, sir. I mean, it's none of my business. I'm a sound guy, you know. It was just, I meant to help you out. You know, I didn't mean nothing by it.
Didn't mean nothing.
Yeah, I mean, just.
Anyways, this goes back and forth, and it gets funnier as it goes on too. But you get the point. There's a lot of celebrities moving over to YouTube. This is something happening that I see that's going to continue happening in the future. And I think over time, YouTube will outgrow even what it is right now to a bigger platform where a lot of media comes from it. And it's not just celebrities and older people moving over, it's also the younger generation. Lots of kids, lots of younger people are moving over to YouTube. They watch it more than Netflix, more than cable TV, more than anything else. They're on YouTube. So the growth of just YouTube's portion of Google, I think, is going to continue to be massive. I think it's highly underrated, and I think it will grow to be a bigger and bigger portion of Google's overall business. So I'm extremely bullish on this portion of their business. So that's just a look at YouTube, but that's not the only part of Google's business I'm bullish on. I think that their AdSense business is going to be much bigger in the future. More advertising dollars is going to be spent on Google in the future and less on more traditional forms of advertisement that aren't as effective as Google's or Facebook's. That's going to grow substantially over time. Not only that, but their cloud service business is going to grow like crazy, and Android will continue to grow. Overall, the business is growing rapidly. We can take a look at valuation. What are the value we're getting out of it? Well, this is where things even get better. Right now, Google is trading at a trailing PE ratio of 35. Which makes it seem expensive, a 35 PE ratio. But you have to realize that Google had an outlier year. They didn't earn as much in 2020 as they could have if there wasn't the coronavirus, and things have rebounded. Spending in advertising dollars has gone up. And looking at a forward PE ratio, Google's trading at a 27 forward PE. That's really good. That's the same PE as Apple. So Google and Apple are both big, dominant, giant tech companies trading at a 27 PE ratio. The only difference is Google is growing 4 times as fast as Apple. They're growing their revenue 4 times as fast. So I see huge value in this company. Right now it's trading around $2,000 a share. I think in 5 or 6 years, it'll be $4,000 or $5,000 a share. That's what I think we'll see. So that's my expectations of the future of Google. I'm very bullish on the company. I think it has multiple paths of growth. I think it will offer a lot of value. I think there's limited downside. So that's my insight so far. Hope you enjoyed the video. If you have, check out the Patreon. It's exciting stuff going on. We have a whole Discord community. There's over 1,600 members, so it's very active. We've had hundreds of people join recently. So check that out. There's a link in the description. The Patreon's a lot of fun. You can try it out and see what you think. But other than that, I'll see you guys next time.